Hey, everybody, it's Lee Goldstein. Welcome to episode 15 of our podcast. It's still in beta, and it's for the week recap of March 6th through March 11th. And I have a little bit of a different look this week: no beard, no hair either. So, deal with it. It's no big deal. The info is what's important, the information. And I'm going to go over what happened to us this week. You know, it's been challenging. You've got the war in Ukraine creating havoc with news trades because the markets are just not responding always the way that we expect. So there's been some good trades and there's been some very challenging trades, to say the least. But we're going to hang in there. We're doing some experimenting with market opens using the tick strike indicator, and we've got some trade rooms scheduled to do that this coming week. Also, FOMC statement's going to be coming up next week. Going to be very exciting. The quarterly grain report is 2 weeks away, so that's the last Thursday of the month in March. I'm looking forward to that. And let's get started with our weekly wrap. And I'm going to do things a little bit differently this week. I'm going to combine a couple of trades because we traded the same index. In other words, I'll talk about the two oil trades I took this week rather than go in chronological order. I'm going to cover just the important big movers that we took this week. And the week started great with the API report. So let's talk for a second about oil. Oil is a son of a gun. It's a bear to trade. You get into the trade room and we see that oil's up $5. How the heck can you trade oil if it's up $5? So normally, if more oil is used than not used, and the report states that, the price of oil can burst up. How hard is it, though, for oil to keep going up if it's already up $5 when you get into the trade room? So that creates a challenge. Also, if you use the typical setup that's on the DMM and it hasn't been updated for the current market volatility of that particular day, it might be damaging to your trade. That's what happened on the Wednesday oil trade. Somehow I just didn't really think it through. I mean, if I could take the trade back, I would have had a bigger stop and a bigger target. So instead of losing money, I really think I could have made money on that Wednesday oil trade. And then the Tuesday afternoon API report was a nice winner, trading with a little bit bigger stop and going for a little bit bigger target. One of the members in our room went for a huge target and he made 50 ticks on that trade. That's $500 in a second. So oil was challenging and profitable this week. And I always look forward to trading oil. And we're experimenting with the oil opens as well. I didn't trade it well this morning because I didn't take good signals. But for most of the week, we did about two or three different oil opening markets, different days, and we had profitable trades on them. So that covers oil. Now, we also traded natural gas this week. Natural gas, the 3 minute after the trade, is a great setup. So I highly recommend that you come into the trade room to learn that setup. It's a special 3 minute after the trade, and we use the squeeze indicator to help us enter. We have moving averages. We do what we call market analysis using technical analysis, something that we are not fanatical about at 10-minute trades because our trades usually move when a news event information is released. But in these markets, you want to think a little bit differently. Do whatever you need to do. So that 3 minute after the natural gas report trade is excellent. Even the natural gas report at the moment of the trade has been working well. As you know, if you've been following natural gas, in September of 21, it started trading very poorly. The poor natural gas trading went through the very beginning of the year and then it changed. And natural gas is now back to being a very tradable index on the report and 3 minutes after. So I highly recommend come into the trade room, learn that setup. It can also be used for many other news events. Wednesday, we had the JOLTS report, we had the 10-year bond, and we had WASD. Let's get WASD out of the way. WASD was a awful trade. I mean, there's nothing that we did wrong. The corn index just had a fantastically difficult whipsaw, and it stopped us out for a big loss. It was one of the worst WASD trades I can remember. Will I trade WASD next month? Yes, I will. I did nothing wrong. We did nothing wrong. But we may try using soybeans next month. They just looked like they were more under control as an index, and they move very well on WASD. So unfortunately, WASD did not work. The 10-year bond auction was a good trade. It was profitable, not a big winner, but our gold, alternative gold setup had the potential to make some money. And the ZB, the 30-year bond, you were able to grab at least 2, maybe even 3 ticks on that report. And that's, $31.25 a tick on ZB. So if you trade a couple of contracts, you could have had a decent trade. So the 10-year bond, not bad, worth trading. Now, JOLTS I wanted to save for last because it's interesting. We have been testing JOLTS for years. It's a report that has been very inconsistent in the way that it responds to the news. It's a jobs type report. It's called the JOLTS Job Openings Report. You'd think it would be a monstrous market mover, but it isn't. And on JOLTS, I knew in my heart that I should have traded a trap trade. A trap trade is a specialized reversal that we like. We bracket the market. Above the market we sell, below the market we buy, the opposite of our breakout trade. But we also had been testing a range trade that had been working month after month after month. We went with the range, and the range got stopped, and we tested the trap right at the same time. It would have worked beautifully. So unfortunately, our range trade on JOLTS did not work, but the gold trap would have. The range trade was the NQ. And I still maintain that the NQ for news events at 10 o'clock, not my favorite index, and we're definitely going to go with the trap for more and more 10 o'clock trades, especially then we can use gold, because gold does very well in these markets as a specialized reversal trade. Thursday, we had the ECB refi, the main refi rate, the 30-year bond. Let's talk about the 30-year bond, and let's make just a couple of comments about the bond auctions in general. You've got the 30-year, the 10-year, the 7-year, and the 20-year. None of them have been very good performing reports for the past year. When the company began, they were ATM reports, meaning people were making $5,000, $10,000, $15,000 trading 10 contracts on those reports. They were monstrous movers. It was before I was working here. So these tails are legendary. But one of our managing partners, Eric, he doubled his account trading those reports. So it's true, but they're not moving well. The 30-year using our standard DMM would not have worked. It needed a bigger bracket and a bigger stop. So going forward for the bonds in the current market conditions, inflationary, price movement, etc., we're going to increase the brackets and the stop if you want to trade ZB. The alternative gold setup is looking better and better on the bond report. So again, if you make your way into the trade room, we'll teach you those alternative gold setups. Thursday, the ECB refi rate had a very nice move, the breakout, excellent trade. That DMM has proven to be now looking like a good solid DMM in the current market conditions. I'm going to skip ahead to Friday, our Canada jobs report. I was very concerned that Canada, because Canada as an index, the Canadian dollar, has poor liquidity, meaning there's not a lot of orders available when you need them, when you want to get filled. So it tends to burst and then fill you towards the top of the candle or towards the bottom of the candle. And then when it changes direction, that can cause your trade not to work. So it did burst. It was slippage, and we were able to get out just with a tiny profit. So I didn't trade very heavily on that report. We didn't get hurt on it. I didn't have a lot of high hopes for it because usually the Canadian jobs report trades with the U.S. jobs report, and it has a much better move. But we noticed something great that will really help us in the next report next month. Gold has a great move on that report. And in fact, there are many reports that are not necessarily U.S. reports that we have not been trading gold on that gold is having good moves, less whippy than when we trade gold on the US reports. So we're going to be looking into finding some of those and adding some of those setups for gold, less whippy, better profit possibility. And then finally, our best and one of our most enjoyable trades of the week was on Thursday. It was US CPI, the Consumer Price Index. That's an inflation-oriented report. And we have a great testing scenario that we've done on that report. We found a fantastic NQ range trade. That's an 8:30 a.m. Eastern Time report. Those time frames are great for the NQ, and our range trade worked beautifully. We traded just one little contract. $250 profit was easy on a single contract, and it was about a 3-4 second trade, and our range trade testing worked really well. So I want to thank everybody. This is actually the shortest weekly wrap up I think that I've ever done. Like I said, we've done some gold opens and oil opens and NQ opens, and we're going to continue with that next week, do a little bit of testing on that and maybe some live ones. We'll see how the markets are. If the opportunity is there, we'd like to take it. And I hope you're enjoying the podcast. I certainly love doing these wrap ups. And of course, I'll continue doing it next week and every week after until we do something different. I mean, that's how it goes. So I hope you enjoyed it. I'm Lee Goldstein, the trading director of 10 Minute Trades. Thanks for watching, and I'll see you in the trade room shortly. Take care.